When starting a new business, it is important to be organized and ready to hit the ground running from day one. A big part of being ready to open for business is having a budget in place for the startup phase, as well as an estimate of ongoing expenses so you know how much revenue you need to make the business profitable. There are many tools for a startup business budget. When it comes to the startup budget, several items must be included. Failure to include all necessary items could result in your expenses coming in over budget, causing a deficit in the beginning stages and jeopardizing the overall viability of the business. Going from concept to operational. The startup phase of your organization encompasses the time, energy, and expense needed to take your business idea and turn it into reality. During this period, you will need a comprehensive budget covering all areas of the operation, including research and development. Your R&D expenses will include the resources necessary to create a prototype of your product, as well as a marketable version of it. If you're selling an existing product or marketing a service, then there will be no prototype needed, but you will still need to perform a market analysis to determine the local interest in the product or service, as well as the level of competition. Hopefully, you're carving out a niche in an area with a moderate level of competition, but with demographics that are favorable to your product or service offerings. Next, location. The cost of your facility where you will locate varies depending on the type of business. For example, if you are opening a retail store, you will need to consider the location as it relates to traffic levels and area demographics. If you are manufacturing a product, location will not matter as much, but you may need a larger facility to house all the equipment needed to run the operation. Other related costs may include leasing, utilities, security deposit, renovation, and signage. Equipment and inventory. Now that you have secured your location, you will need to acquire the equipment and inventory needed to operate the business. This is an area where there'll be some flexibility. To keep expenses lower, you may be able to lease some of your equipment and/or purchase it secondhand. You will also want to talk with a professional accountant about the tax implications of how you expense your equipment. Your startup inventory includes all supplies needed to operate your equipment and open your doors for business. Marketing. Once you are ready to open up, you will need to get the word out to your target market. There are many ways to do this, both online and offline. This will require a full evaluation of your business to determine which advertising and promotional methods will work best. In the beginning phases, the marketing budget should be generous because there will be a learning curve in determining how best to reach your market. It is better to err on the side of doing too much rather than too little. Just make sure that you track where your customers are coming from so you know which advertising methods are most effective. Down the road, you can refine your marketing process to use only the methods that are producing the best return on investment in terms of customer growth. Other miscellaneous expenses that will cover all other projected startup costs that do not necessarily fit into another category. These may include incorporation, business licenses, insurance, legal guidance, accounting, and professional business consulting. For startups, the help of a business consultant can be invaluable, ensuring that all expected expenses are accounted for and that no major mistakes are made from the outset. For this reason, seeking the expertise of a business startup professional can pay big dividends in the end.